before this.
Hello and welcome to Symmetry's New York Medicaid Cost Report webinar. I'm Lynn Estep. I'm in our marketing department, and I'd like to introduce Mike Simione, Director of Cost Reports, and James Fiderio, our Senior Consultant. So thanks again. Also to let you know, I'm going to be placing the handouts in the chat. If you have any questions, please either put them in the Q&A or the chat section. And if we have time at the end, our speakers can address those. But thanks again and take it away.
Thank you, Lynn. As Lynn said, my name is Michael Simione. I'm the Director of the Cost Report Division here at Symmetry. I've been with Symmetry for over 10 years, going on 11. Can't believe it's been that long, and I've been doing cost reports since day one, since I started at Symmetry. And in addition to that, I do quite a bit of financial and operational consulting. And kick it over to James to introduce himself before we get started.
Yeah, sure. Thanks, Mike. Like I said, I'm James Fiderio. I'm a senior consultant on the cost report team. I've been working with Symmetry for just under 3.5 years now. So I mainly work on the cost report team, but I also help on the data analytics side and the financial side as well, completing budgets and other financial engagements. So happy to be here presenting with Mike.
Next slide. So Symmetry, a little bit, if you are unfamiliar with Symmetry, it is the merger of just over about a year ago. So it just celebrated a year in May of Blacktree and Simione. And so two of the largest consulting firms in the home care space came together. And, you know, this was a great merger because both companies really focus on putting our clients first. And we value the relationships that we've built over the years. And together, what we have been able to do is become a full service partner and help all of our home care clients, home health, hospice, private duties, in this case, LICSAs and FIs in New York, as well as certified home health agencies, to be a full service partner to offer a wide array of services. And that includes what we're going to talk about today with the New York State Medicaid cost reports and kind of the process that we go through, the important schedules that are there. So Symmetry is all about balance. And so that success relies on, you know, equal parts of clinical excellence and financial stability. And this is unity across operations, technology, and care teams. And this is something that we bring into our own company. We really work and collaborate across divisions, especially within our consulting team. We have an IT, an operational, a financial, a revenue cycle, a cost report, and a business development, marketing, and sales consulting team. And we all work together and keep each other updated on what is going on and involve one another with engagements that are going on so that we can really full service our clients and bring that balance of knowing everything. And that's what we try to impart in our consulting services to our clients and to our organizations, is that balance and that cross scope of services that once you're in with us, you're really in with the entire company. So if you have any questions, you know, we're going to get the answer for you to the best of our ability. And, you know, in Symmetry, you know, balance is in our name. It's everything that we do. We align our teams and our services and approach to help clients meet their challenges. And in the current home care space, there are so many challenges, and the New York State Medicaid cost report being one of them. It's something that takes a lot of time to prepare. So how can we help agencies do that efficiently so that their financial teams aren't getting bogged down with preparing this cost report while they have to do their day-to-day, month-to-month operations? So today we're going to talk about the 2021 fiscal year end New York State cost reports for the certified home health agencies, as I'll refer to as CHAs, the licensed home care services agencies that I'll refer to as LICSAs, and hopefully my Alexa does not go off during that time because that tends to happen. And then also the fiscal intermediaries known as FIs, formerly known as CDPAPs. And we're going to go over the webinar that was held by New York State and KPMG on June 28th. And then we're going to talk about the key schedules that are involved with the cost reporting. We're going to talk about, how to fill those out, what the reporting of the cost should be on those schedules, and the various allocation methodologies that can be used on these cost reports. And, some of those can be, I wouldn't say tricky, but in terms of building your work papers. And then James is going to wrap up with going through the audit process and, his experience working with clients over the last 2 years of those clients that have gone through the audit, and kind of key takeaways that Symmetry has taken away, as well as New York State has taken away. So with the webinar that was held a couple of weeks ago with the kickoff for the cost report. So, issues noted from the 2020 cost report. So 2020 was the second year. So we're going into year 3 of this. So they've made some pretty, I wouldn't say significant changes, but effective changes based on what they've seen in the first 2 years. And so, one of the things they noted was on the 2020 cost reports was the timeliness of submitting the cost reports and the supporting documentation. Now, it is important to note that the portal is now open. The portal went live a couple of weeks ago, I believe on June 21st of 2022, and they give you 90 days to complete this cost report. So we are now in that 90-day window. These cost reports are due no later than September 20th of 2022. Now, this is significantly earlier than it has been the last 2 years. In 2021, the 2020 cost reports were due November 15th of 2021. And the year before that, they were due actually on Halloween, October 31st of 2020. Or 2020 for the 2019 cost reports. So they're moving this up. So the important date for you to know is that we are now live. The portal is now open for anyone on this who has a New York Medicaid cost report due, and this is due September 20th. And they're really trying to crack down on the timeliness of submission of the cost reports, being that hard due date of September 20th for that. In addition, what they've worked on is the reconciliation of cost report numbers to support the document, to the supporting documentation. Now, this is one area where, Symmetry has helped their clients a lot, and we didn't have as big of challenges as some of the other agencies that were audited, is that your supporting documentation needs to tie to what is in the cost report to the dollar. So it needs to tie. And so your supporting documentation cannot be just hard key numbers. They need to be linked, and they need to be comprehensive in showing how you got from the trial balance, from the payroll register. We'll go over the various reports with some of the schedules that are included in this, to the actual cost report, and including the allocation methodology when you have to report information by discipline and by county. So, and what they have done as well is they've built some checks into the cost report software to show this. And we'll talk about that later on another slide to give some examples of that. In addition to that, they're really focusing on the inclusion of the non-allowable costs on the cost report. And so with these non-allowables, we'll go into much more detail, but some of the examples are meals, advertising, cash receipts, income taxes, etc. In addition to that, we're going to go over some of the various allocation methodologies, but they want you to state and show the allocation methodologies that you're using within your cost report. A, if you're doing it between entities, or B, if you're doing it across counties and across disciplines. And so what they saw a lot of, especially, and we'll go over these two schedules, but schedules 3 and 4 are the really, important schedules. I would say they're probably the most important schedules on the cost report. And so the numbers need to tie between schedules 3 and 4. And they found some inconsistencies in their audit, and those agencies had to go back and fix those. Now, with our supporting documentation, we've accounted for this. So, we'll show you how you can do this a little bit easier. In addition to that, there's the classification of payers, what is Medicaid versus what is Medicaid managed care, and making sure they're separating out those visits, units of service, hours, days, whatever it might be. In addition, the last thing they cited is that most of the cost reporting supporting documentations did not have policies and procedures of how the supporting documentation was put together. And so you really need to have that policies and procedures page in there that shows what is the source data behind the schedule, what is the methodology behind or the crosswalk, or how are you getting from the source data to the schedule? And then lastly, what is the allocation methodology that you're using to get the data and allocate it by unit of service, by county, whatever that might be. And we'll go to some examples of that in a little bit. So, conquering the issues, key schedules and information. The financial data on schedules 3 and 4 is so important, as well as the statistical data on schedule 5. And you'll see how these all tie together. We're going to go into detail into all of these schedules. And then James will go into detail on the labor and compensation schedules. You know, the rest of the schedule is basically 8 through 15, and then schedule 16 breaking down the highest paid administrative officials. So, but schedules 3, 4, and 5 where we're going to spend the bulk of our time, and we have a lot of slides that kind of break down these schedules and show the information that needs to be reported by the type of provider. Because remember, we've got 3 different types of providers that could be a CHA, a LICSA, and an FI. So schedule 3 is your costs and expenses. This is your summarized total costs and expenses of the entire entity. And so we broke this down just to show all of these columns are the same across a CHA cost report, across the LICSA cost report, and across an FI cost report. The only difference in the columns would be the between these types of cost reports would be that the CHA, the Certified Home Health Agency, does not have to be reported by county. So you'll have one schedule 3 for the entire Certified Home Health Agencies. LICSAs and FIs are required to report schedule 3 for each county of service where patients were serviced in the calendar year or the fiscal year that we're looking at, which is fiscal year end 2021. And so you have to look at this a little bit differently. You know, it's reading right to left rather than left to right, which is a little bit counterintuitive. It's how New York State and KPMG decided to set up their portal. So, you know, don't hold that against me. But the first column is the total entity cost. That is a calculated column that will be summarized. So that is not an area where you have to put data. Column 2 is where you're going to put in those non-allowables. And we're going to go into detail about those non-allowables. But once again, that's your advertising costs, your income taxes, meals, you know, alcohol, things of that nature. Column 3 is another summing column. So column 3 sums columns 4 through 10. And so then column 1 sums columns 3 less columns 2. So basically we'll take the non-allowables out and show the total entity costs in column 1, which is the number that they are concerned with. So in columns 4 through 5 is where you're really putting your data on schedule 3. So column 4 is your program administration. These actually come from schedule 4. So this is your non-direct care expenses. So schedule 4 is your administrative overhead non-direct care expenses. And those numbers will be allocated. You'll see how they're going to be allocated in a couple of minutes into column 4. Then you have your program aid, your direct care. So your direct care costs, this will be broken down by discipline, and we'll show the various disciplines for each of the types of cost reports. Then you have your program supervision, assessment, direct care costs. Then you've got your program staff training costs, your transportation or mileage, any contract or purchase services, and any other direct care costs. So schedule 5 through 10 represent all your direct costs. So everything above your line, everything that you would factor into your gross margin calculation. And then column 4 is your administrative, your indirect expenses, and those come from schedule 4, which we'll show in a second. So schedule 3 is going to show everything. So schedule 3, the total of schedule 3, whether it's CHA, which is an aggregate, or each county, should sum up to your total income statement in terms of total expenses on your income statement. Now we're going to show how each of the schedule 3s are broken down. So for CHAs, and we'll show this and we'll go into detail on these slides, it'll be very similar across a lot of the other schedules in terms of the detail that is required. So for your certified home health agencies, you need to break out your level of care by discipline. So for home health, we're used to seeing home health aides, physical therapists, occupational therapists, registered nurses, medical social workers, nutritionists, speech therapy, respiratory therapists, social and environmental support, and then sign language and oral interpreter. In addition to that, for those CHAs that have personal care level 1, personal care level 2, and personal care level 2 hard to serve, your live-in services, your nursing supervision, your nursing assessments, and then any shared aid level 1 and shared aid level 2. So if your CHA has any or all of these services, this is the detail that will need to go on Schedule 3. So when we look back, these are going to be your program direct care expenses, right? And so, or your contract expenses or your mileage by discipline. So this is how you have to break them down. So there's a line number and a column number on each schedule where each value will go from your income statement. So it's important that you have this level of detail broken out on your income statement or a way to break out this level of detail from your financials. For Elixa, it's a little bit less because we don't have any of those home health services. Now we just have those personal care, level 1, level 2, and level 2 hard to serve. Your live-in services, if your Elixa is doing any live-in services. If you have any Elixa nursing supervision or nursing assessment expenses, your shared aid level 1 and level 2, and then your other non-allowable services. So Elixa, a little bit simpler, a little bit less cumbersome because there are less disciplines for a Elixa versus a CHA. And then lastly, we have our FI, which shows, the CDPAS, the individual hard to serve, individual live-in, or if you're servicing multiple patients in the same place, your basic, your hard to serve, and your live-in for your FIs. So if you have an FI, these are the direct care expenses that you have to break out, only 6 lines. So you can see for each type of one, it goes. Remember, for Elixas and FIs, this needs to be broken down by county, and we'll get to that when we talk about allocation methodologies and statistical reports. So Schedule 3, dedicated schedules for the CHA is 3A, dedicated schedule for the Elixa is 3B, and dedicated schedule for the FI is 3C. So when you go into your software, if you have a CHA, you will have schedule 3A, 4A, 5A, etc. If you have Elixas, you'll have 3B, 4B, 5B. And if you have FIs, you will have 3C, 4C, 5C. So that's how the software and the, not the software, the portal is set up with the schedules to show that. And so this is geared, once again, as I said, towards the entity's total services. And it should be all of the allowable and non-allowable expenses in there. And so you need to make sure, once again, that the appropriate costs are on the appropriate line and appropriate columns that we just spelled out. And then the supporting documentation for this should be your trial balance and or your P&L, your income statement. And each entity should reconcile to a financial statement. So if you've got Elixa and you service 2 counties, the 2 counties on Schedule 3 need to add up to the total expenses on your trial balance or your income statement. Both logically, because they should be the same, but the total expenses from those schedules. In addition to that, what we recommend is setting up a crosswalk. And what we mean by that is when you're breaking down your financial statements, you should have a column, a line number, and a schedule that shows where this value is going to. So say your nursing salaries are $100,000. Your nursing salaries for the home health would go, James, can you go back to the chart of the columns? So your nursing salaries would go under program aid direct care. So that'd be column 5. So if you had skilled nursing, whether it was RN or LPN for a CHA, your salaries would be column 5. So there'd be Schedule 3, column 5, and then go to the next line, and then just the CHA. And for RN, it would be line number 4. So setting up a crosswalk that shows your nursing salaries going to Schedule 3, column number 5, line number 4. If you were Elixa and you got personal care level 1, that would go to it would be 3A for a CHA, 3B for Elixa. It would be that same column 5, but on Elixa, you go to the next slide, James, it would be PC level 1 would be line number 1. So just a crosswalk that shows, okay, this is my personal care aid level, and that's how you would develop that crosswalk. All right, let's go back to where we were. And so, as I said, Schedule 3, the program admin column in column 4 should tie to the total Schedule 4 expenses. And that's why your Schedule 3 should tie to your total financial statement expenses. All right, next slide. All right, so now we have our general service cost centers. And so this is the Schedule 4. So once again, we're reading this kind of right to left, where we're summarizing at the left end. So our totals are in column 1. That's going to be a summary of basically 3 plus 2. 2 is our non-allowables. So once again, we've identified our non-allowables. And then Schedule 3 is the sum of 4 through 10. And then we have our program administration. So that's our program admin. That's going to be where the majority of our admin costs sits. Now, we should not have any program aid direct care expenses on this slide because there is no program. We're not putting our direct care on Schedule 4. That all goes to Schedule 3. So actually, when you look at the schedule, this column is completely grayed out in the portal. So you can't put data in there. But we've got the same other columns, just with only having the administrative expenses in here for Schedule 4, and then those summarize up into Schedule 3. And then showing how these break down, it's the same columns for the LICSAs as well as the FIs. So when we get to Schedule 4A, the general service cost centers, these are now the rows that need to be broken out. So we've got our criminal background checks, our capital related, this is our building and our fixtures, our capital related for any movable equipment, our plant operations and maintenance, the rent for the buildings, the rent for any furnishings, the rent for any vehicles, interest, depreciation of plant of the building, depreciation of any equipment and or furnishings, and depreciation of our vehicles, and then our utilities, any supplies and materials, any insurance, any A&G, and then we've got employee physicals, uniforms, and immunizations, and then a catch-all bucket for everything else that doesn't fit into one of these categories. So that is how we are breaking down the general service cost centers, so that administrative expenses, that A&G expenses for the CHOP. If you go into the LICSA next, it is the very same, exact same schedule. So we're just showing, 4A, 4B, 4C in this case are the same across all of the providers, with the exception of we don't have that employee physicals line for the FI, because that's not an anticipated expense for the FI. So that's the only thing that's removed, but these schedules are very similar. So when you're breaking these down, the only difference is going to be 4B and 4C need to be broken down by county. And obviously we don't know the administrative expenses by county. That's where our allocation methodologies that we'll talk about later will come into play. So Schedule 4, we must make sure that the expense in the appropriate line and column in 4. So once again, creating that crosswalk for our A&G expenses this time, our general service cost centers, as they're referring to them in the New York cost report, making sure we're saying this is going to Schedule 4A, line number 1, column number 4. So column number 4 being that program admin column, and line number 1 would be, I believe, our, James, remind me what, go back one slide, what's line number 1? The criminal background check and fingerprinting. Anything your capital related building, that would be line number 2. So just making sure that crosswalk is showing what schedule, what line number and column number the expense from the trial balance or the income statement is going to. So Schedule 4, line number 19, grand total, should tie, and we've said this a few times, but just to reiterate, to Schedule 3, column number 4, line number 19 for grand total. So the grand total on 4 needs to be in column number 4 on Schedule 3. You will get one of those edits from the cost report software if these don't tie out. So you will basically be warned, hey, your schedules do not tie. In addition to that, Schedule 4 costs will be allocated to the service lines using acceptable allocation methodology. We're going to go into those a little bit later in the presentation. So when we're breaking down this information, we just wanted to show kind of that example of how Schedule 3 ties to Schedule 4. So you're seeing Schedule 4B on your right for LICSA. So LICSA B is servicing Albany County in New York. And you'll see the total expenses here. You got $300 for your criminal background check, $300 for your plant operations and maintenance, $300 for the rent for the building, $300 for utilities, $500 for insurance, $1,000 for A&G, $500 for employee physicals, and $800 for other, totaling up to $4,000. And so, you would have a crosswalk that would show these expenses coming from the financial statements where they're going on Schedule 4B. Then on 3B, what you're seeing over here is the allocation methodology applied to that $4,000. And so that program admin needs to be allocated to each level of care. And there are a number of different ways you could do those allocation methodologies. And like I said, we're going to go over those later. But this is where schedule line number 19 on schedule 4 needs to tie to line number 19, line number 10 on this case for the LICSA on schedule 3B. With that program admin. So that $4,000 ties between the two schedules. And we'll talk later about how we get the $4,000 allocated to each level of care. So the financial reconciliation tab is a brand new tab this year that was introduced by KPMG to help agencies tie to their financial statement. It will not be accessible until after you filled in all of the schedules. And what you'll be able to do is you're going to be able to utilize this tab to reconcile back to the total entity costs reported on schedules 3A, 3B, and 3C. So agencies will enter the total expenses and the bad debt listed on the financial statements. And then this financial reconciliation tab will automatically calculate any variance between what is on the financial statements and what is on schedule 3. So this is something that they've incorporated to make sure that everything ties together within the software, because when they went and audited last year, they found a lot of times that schedules were not tying between the financial statements and what was reported in the actual cost report. So it's a nice addition that's come through the audit process from New York State and KPMG. All right, now probably the crux of how the whole cost report is kind of completed is the statistical information that needs to be included. So we've broken down this into several slides. So, this is 5A1, just showing the CHA pediatric services. You'll have 5A for a regular CHA, 5B for a LICSA, 5C for an FI, and the disciplines are going to be different. We're going to show each of those. But the key here is identifying the correct payers and making sure that you're identifying the correct payers. So for Medicaid, for example, you need to break out your Medicaid fee for service from your Medicaid managed care. And then the total Medicaid will be the sum of those two, which will automatically populate in the portal once you put the fee for service in. And now on these statistics, depending on what type of provider you are, or what the discipline is, your units of service may be visits, days, or hours. And so patients is obviously the same count. That is your number of unique patients within each discipline for each payer, but your units of service may be visits and days like they are for a CHA with visits versus units of service more likely for a LICSA. So this is your Medicaid. So making sure you know and you can readily identify your fee-for-service Medicaid versus your managed care Medicaid, which is one of the things we noted that was commented on in the audit process in the review findings that KPMG found when they audited these last year. So next up, you will break out your dual eligible and your Medicare patients. So your Medicare and Medicaid dual eligible patients, they need to be reported. They should be reported both in the Medicare section, the Medicaid section, and the dual eligible section. So just as an FYI, they need to be reported in all three sections to be accounted for, but they are asking you to report all of those dually eligible patients who are eligible for multiple insurance plans, and your Medicare as well. Same thing, depending on what discipline and what type of provider, your units of service may be visits or hours or days, and they gray out what you're not supposed to include. So if a specific discipline should have a visits unit of service, that is the field that is open versus an hours, or the hours is open if visits are not applicable for that unit of service. And then lastly, all of your other payers. So your private pay, and then everything else included in one bucket. So make sure Medicaid, they need the detail between fee-for-service managed care, Medicare, and dually eligible, then your private pay, and then everything else. And then it totals up this time all the way on the right at the end, basically across all of those. It will not double dip on the dually eligible patients. So it only counts those patients once in the totals. So when you're doing a CHA, this looked very similar to what we had on Schedule 3A. These are the service statistics, each of the disciplines or levels of care that should be reported on a CHA if you are offering these services. Not all CHAs are offering PC level 1, level 2 hard to serve, or live-in or shared aid services, but most are offering at least, skilled nursing. I mean, RN must be offered. most likely physical therapy, sometimes occupational therapy, speech therapy, depending on size and scope of services, and then sometimes nutrition, social work, home health aid, all of these. So these are the disciplines that need to be broken out. Some of these are by visit, or some of these are by hour, live-in services, typically by day. Next up, we'll go through our, So that is for the LICSA. I don't think we show the FI or the LICSA for these, but it's summarizing all of the activities, all of the billable activities by of the payer by payer and by discipline. And so it should be supported by some statistical report that comes from your electronic medical record or whatever software you're utilizing to capture these visits, days, hours of service by discipline, by county. Remember, LICSAs and FIs, this is where it's very important. You need this by county because this will be the fundamental basis for all of your allocation methodologies. Once again, we recommend setting up a crosswalk from that schedule that shows, okay, this is this servicing this county, this is this level of service, and this is this payer. So that when KPMG goes to audit, they can identify what you've identified as a Medicaid fee-for-service payer versus a Medicaid managed care payer. They can validate what the county that's being serviced and the type of service that's being provided. So once again, making sure that you're differentiating. Medicaid fee-for-service is traditional Medicaid billed directly to Medicaid. So that is, and then your Medicaid managed care includes your Medicaid long-term care volume. So making sure you're able to differentiate those from those statistical reports. And then there are duly eligible payments per the instructions. So the Medicaid and Medicare columns should not be unique. Individuals should be counted multiple times in these columns. For example, the patient's visits and days and or hours for duly eligible Medicaid and Medicare individual should be counted in both the Medicaid and Medicare columns per the cost report instructions.
Okay, great, thanks, Mike. So the next couple slides have to deal with the labor and compensation. So the schedules 8, 9, 11, 12, 13, and 15 have to deal with the labor and the hours. So the information that's requested to cover these schedules should cover the in-house staff, your salaried staff, as well as your outsourced contract labor. So like Mike said, these reports to cover the data should come from either an internally generated report that might cover a payroll report or some other kind of payroll tracking report, or by a third-party vendor such as your EMR. And then a lot of the information coming from the source, however, should go for Schedule 8 is requesting the FTEs, and then the salaries and the benefits breakout, and that's for Schedule 8, which is the salaried employees. And for Schedule 9, they're really looking for the FTEs and the salaries. They're not going to be asking for any benefits due to not having any benefits for your contract labor. And then Schedule 11, that has more of an in-depth detail breakout of the salaries and benefits. And you can kind of see in the screenshot below. And we'll go into more detail when we get to that slide. And Schedule 12 will be going through the total hours paid to your salaried employees. First, though, we wanted to go through a few key questionnaire items. On the left of the screenshot, you can kind of see they're asking for the total COVID monies that you received in the year 2021. It's still important that we accurately report all of this money so that KPMG can see that we received that money, if the agency received that money. And on the right side, they're also asking for by LICSA, FI, and CHA, if you provided any Medicaid fee-for-service, Medicaid managed care, or both or neither. And if you don't have a LICSA or FI, let's just say you had a CHA, you would only need to answer for that CHA, and you would put not applicable for the other two. And this is to help them determine what services your agency provided. So some more updates for the 2021 cost report. They continue to add in additional built-in checks to make sure that we're tying in between all of our schedules. So for example, we want to make sure that the values tie between schedules 3 and 4, and that our total expenses on schedule 3 ties to our financials and what expenses we have on our financial statements. The other additional built-in check that we want to touch on was to make sure that the data is entered in the required fields. So for example, we want to make sure that if we have data for our expenses by level of care, by discipline, by county, then we want to make sure that we match our units of service on Schedule 5 by level of care / discipline by county, and vice versa. If we have services provided on Schedule 5, we want to make sure that we have those expenses to match on Schedule 3.
Yeah, just as an example of that, for a CHA, if you had only one, say occupational therapy visit in a county, you need to have expenses that reflect the occupational therapy visit that was in that one county, even if it's only one visit, even if it's only 1 hour of service on Alexa for a PC level 1 in a county. You need to make sure if it's on 5A in a county that reflects on 3A or 3B, the corresponding schedule there. So just making sure that if you've got service, you've got expenses to reflect that direct care service.
Exactly. So Schedule 8 and 9, this is the compensation analysis. So Schedule 8 is covering your salaried employees, all of your in-house staff, and then Schedule 9 is your contract labor. So these are broken up, you can see on the columns here, we're broken up by job titles, so supervisors, nurses, aides, then all of your therapy, and then any other job title would fall on that last section. And what they're looking for is a breakout of your FTEs, so your full-time equivalent salaried employees for Schedule 8, and then your FTEs for any contract labor that you use throughout the year. And then they're looking for the salary and the employee benefits on Schedule 8, and then just the compensation on 9. And they're not looking for a detailed breakout on these two schedules. They're just looking for total salary or compensation, and then total employee benefits for Schedule 8. And then we'll go through the job type again. Mike kind of already covered these for the CHA, LICSA, and FI. So it's really the same job types. We have all of our skilled services for the CHA, personal care aid, nursing supervision, your home health aide, your physical therapist, occupational therapist, your registered nurse, any social work that you have, your dietitian, speech therapist, any respiratory therapy, any environmental support workers, and then any sign language or medical social services as well. And then, like Mike said, we have less job types for the LICSA. It's just broken out by personal care aid, nursing, and nursing supervision. And for the FI, we just have the personal assistance that we would need to report for. And for the LICSA and the FI, we would have to make sure that we're breaking these out by county.
The key difference here is that the, in FIs, we've got each of the levels of care, the basic, the hard to serve, and same thing with the PC, for LICSA, PC level 1, level 2, and hard to serve in the live-in. In this case, we don't need to break out by level of care. We only need to break out by the position. So since the personal care aide or the personal assistant for an FI, or the personal care aide is providing all of those services in the LICSA and FI respectively, you would just summarize all of those, whereas schedules 3, 4, and 5 require you to break it out by level of care in addition to by discipline, where these is just by discipline.
So then Schedule 11, we have our labor costs. So now we're getting into a little bit more in-depth breakout of the wages and the benefits. So going from left to right here, the first column is just your regular base wages for your hours worked. Then you have the in-service wages. This is if you have any in-services. And then if you did have in-service, you want to make sure that you're reporting all of that on Schedule 14. Then you have your travel wages. So anything that you are paying your employees if they're traveling from client to client. Any overtime wages or weekend or holiday wages, you want to make sure that you break those out as well. And then all other wages would be, bonuses or any other compensation that they might receive throughout the year. And then for the benefits, we have any paid time off that you're paying your employees, making sure you're tracking that, making sure you're tracking any jury duty or bereavement pay that they get while if they're out, any non-taxable dollars for fringe benefits, FICA taxes, any disability or unemployment or workers' comp also needs to be tracked as well. And then all of your other fringe benefits would go in that other column, and that would really be, any, maybe dental or vision or life insurance that wouldn't fall under those other benefit categories. And again, we're breaking these out by the job type for direct care. The only difference now is we're also adding in the program administration section in the bottom. So they're looking for the director, administrator, program director, any office workers to be included, your clerk, any housekeeping or maintenance. These are anyone that are, salaried employees. So for the maintenance and housekeeping, you would not include any contract housekeeping or maintenance on this schedule. And then any other, we would probably include, marketing, IT, accounting. They would fall in the other category for these sections. And it's the same thing for the LICSA. They have the same direct care job types, and then also those program administration. And same thing for the FI. And then also making sure, obviously, we have to continue to break them out by county. And really, you have to make sure that anything that you're breaking out for the direct care, you want to make sure that you're doing the exact same thing for the program and administration, because they're really looking for those breakouts as well for all the benefits and the salaries. So Schedule 12 is the labor utilization. This is the total hours worked by all the employees. And again, in the first column, they're looking for the FTEs. So these are all of your full-time salaried employees. You would include them in that column. In the second column, you have all of your base hours worked. So these are your normal hours worked in a work week. And then any overtime hours would be included as well. And then the travel time hours as well. And then any holiday hours you need to include at the end there.
And that FTE equivalent would be full-time and part-time staff. So
Exactly,
if you have anyone working 20 hours a week, but they're still considered a part-time employee and a benefited employee, you would want to include their hours in this as well.
Yep.
Just everything but except for contract staff.
Yes. Yep. And then the same thing, we're going to break it out by direct care and program administration. And it all remains the same for the child LICSA and FI. Just the main thing, if it's the same thing as the schedule 3 to 5, making sure those tie. We want to make sure that these tie. If we have salaries and benefits, we want to make sure that we have hours as well. So if you have travel salaries that you're paying out, you want to make sure that you have travel hours. And same thing, if you have holiday hours worked, you want to make sure that you have those holiday salaries paid, tracked, and put onto Schedule 11. So same thing for Schedule 12B, which is the LICSA, and 12C, which is the FI, making sure that we're tracking everything for all the counties and making sure that they all tie between the hours and the actual paid salaries.
And this information you wouldn't expect to be tracking by county. The only information that they expect you to track by county is your units of service, is Schedule 5. All of the other information is reported by county, but that's where the allocation methodologies come in that we'll talk about a little bit later. So, you do need to report it by county, but they expect you to be calculating it by county. They don't expect you to have your director or personal assistant wages by county in your financial statements. That would be absurd. But using the statistical information, they expect you to take those statistical percentages by level of care, by service, by county, and allocate accordingly.
Yeah, thank you for that clarification, Mark. You're right. So Schedule 13 and 15, we're going to have the information. So anything that you use for the schedules, populating schedules 8 through 12, we're going to use those to the same supporting documentation to populate 15 and 16. And schedule 13 is automatically calculated using the data from schedules 11 and 12. And we'll kind of go over that in the next slide. And then, like Mike discussed before, making sure that we have the correct crosswalks to show, if we're breaking it out by county, how we're getting that allocation. If we're using levels of service from Schedule 5, having that crosswalk available, and making sure we upload it to the SFTP supporting documentation site. So Schedule 13 is the average compensation calculation. So we've got the 3 columns. The first is the average base hourly wage. So this one is calculated by the base wages on Schedule 11, and you divide that by the base hours worked on Schedule 12, and that'll give you the average base hourly wage. So then in column 2, you have the average total hourly compensation, and that's by taking the total compensation reported on Schedule 11 and then dividing that by the total hours worked on Schedule 12. Now, the total compensation also includes the benefits in the total compensation. And then the average fringe benefits, that's when you take the total benefits on Schedule 11 and you divide it by the FTEs reported on Schedule 12, and that'll give you the average fringe benefits. Now, that's why it's so important to make sure that you are using consistent supporting documentation for all of the schedules to make sure that it all flows properly to Schedule 13 and that the numbers look accurately when it's automatically calculated. And again, we're breaking it out by direct care and program administration. So having those same job types for CHA and the LICSA and the FI, and making sure that we're also breaking it out by an allocation for the county as well for the LICSA and the FI. So Schedule 15 is the salaried labor cost. So this is, again, we want to make sure that we're using consistent data here. So we're going to be tracking all of the full-time equivalent salaried positions in the company. And you're going to be reporting the salaries, the fringe benefits, the bonuses, and then all other compensation will be reported on Schedule 15 as well. Now, there's a lot of lines on Schedule 15 that are listed as other, and we'll kind of go through that right now. So anytime you put an employee or a job type in the other category, make sure that you're putting that job type or the job title in the title column in the first column of this schedule. So for example, if you're using physical therapist and you want to put that on line 2, make sure that you're putting physical therapist in the title of the first column in this section. That way KPMG knows exactly what employees that line belongs to. And again, you should list all of the direct care up in the top section, and then all of your program administration will go in the bottom section. And it's the same thing. Anything that's not listed in that program administration, you're going to want to put on the other lines, and then just make sure that you put the title of those individuals in the first column. And then Schedule 16 is the top highest paid key administrative employee information. So making sure that we're reporting all of our top 10 paid employees. Most of these are going to be owners or executives. But if you don't have 10 owners or 10 executives, you can list other paid administrative officials and just list them from largest paid to the lowest. And if you don't have 10, you don't have to fill out all 10 slots. But making sure that you're filling out the officer's name, they do require the name of the officer for each 10 position listed, and then also their title or their position, and then breaking out their salary, benefits, bonuses, and other compensation. And we want to make sure that these, again, tie to Schedule 15. And an easy way to do that is just making sure that you're using the same consistent supporting documentation, and making sure that we tie between all of our schedules for the labor schedules.
Thanks, James. Next, we're going to go through the allowable versus non-allowable, just a little bit, a couple of slides, but we've only got about 10 minutes left. So I want to make sure we're leaving some time for questions. But, the Medicare CMS has a section in their reimbursement manual, and the link to that is on the bottom of the slide, which is in the handouts, that provides the definitions and the types of costs that are allowable versus the non-allowable. So basically the definition is a reasonable cost of service necessary and proper in rendering of services to beneficiaries. The providers of service must be prudent and cost conscious and not pay more than the going price for an item of service. So a non-allowable cost would then be costs not related to patient care that are not appropriate or necessary and proper in rendering services to beneficiaries. So obviously, some of the allowable costs would include salaries, benefits, contract labor costs, and other non-salary related and contract costs that are related to the delivery of services to patients. So here's the site to that provider reimbursement manual for CMS that goes into detail in terms of going beyond that definition. But if we go into the next slide, we'll just have some examples. If we're going to go to, excuse me, first we've got the federal regulations basically saying, and this is from Medicare, and like we follow their principles a lot in completing this cost report, because New York State and KPMG, they're following the same methodology for allowable versus non-allowable expenses. So this just goes through the federal regulations and the codes and the, all of the regulations. So just the data to validate these are the, allowable versus non-allowable and the definitions of where that information is located. And then on the next slide, we'll get into some of those. So once again, here's that link to that provider reimbursement manual. And so, so it's followed by all Medicare providers for filing cost reports, and most state Medicaid programs follow these same requirements. So this is where we're citing that. And once again, here's the link to that. So last slide on allowable versus non-allowable, or last couple. So some allowable costs. And so, what's the difference between allowable and non-allowable? Advertising and marketing, there's some, gray area in those expenses. So, PR, I'm presenting a good public image of the agency. So, PR, if you have any expenses related to your organization being written up in a local, press release, or in a local newspaper, if there was any expense associated with that, that would be an allowable expense. Recruitment of new personnel, that is a 100% allowable expense. And, right now that's obviously more than necessary to provide services, especially with the staffing crisis that's been going on nationally across the home care landscape. Agencies' information and educational materials provided to professional groups. So, if you're providing information on your provider to any professional groups, that would be an allowable expense. A listing in a telephone directory, website, and other mediums of communication used by similar agencies in a given area, that is an allowable expense. And then any other advertising or marketing that are related to the delivery of patient care are reasonable. In addition to that, membership costs in organizations, and I'll get into detail on that. So, if you are a member of the New York State associations, either HCS or HCA, I believe are the two, that I'm thinking of, membership costs to there, the dues paid to there are allowable to a portion. And we'll get to that on, I think, the next slide, or one of the next slides. Yep, on this slide. So advertising and marketing costs that are non-allowable. Any fundraising, any promotional activity or publicity costs that you're putting out there. So this is not just general education or your website, but beyond that, promotional activity, advertising expense, advertising to the general public, trying to increase patients. That is a non-allowable expense. Sales and marketing personnel salaries and benefits related to those staff that are doing that advertising and marketing. This would not be people doing community education, but rather people who are just doing sales and marketing to increase patients, generating those promotions and advertising. And then of those membership dues that we just talked about, if you're a member of HCA or HCS in New York State, the portion of those dues associated with lobbying activities. So if they have a portion of their dues and they tell you that 15% were expenses related to lobbying, 15% of your dues is non-allowable. So say you pay $1,000, 15%, $150 would be non-allowable expenses. So when you're reporting those non-allowables in columns 2 on schedules 3 and 4, it's important to understand and be able to identify and differentiate between these. Some other allowables, for example, some taxes expense that are allowable is like property taxes and minimum franchise taxes. And where exemptions are available, just expect the agency to take advantage. If then the taxes will be non-allowable. So some non-allowable taxes, any income taxes, both all federal, state, and local income taxes and sales taxes are non-allowable expenses. So just being able to differentiate, there's some gray area in advertising, some gray area in taxes. And then on the next slide, other allowables, legal fees, those are an allowable expense as long as they're related to the furnishing of patient care. If they're related to, for example, acquisition expenses, if you are merging with another provider or acquiring another provider, those legal fees are not allowable expenses. And so, home health coordination, if you're transferring a patient, education and liaison activities where you're providing education, those are allowable. Transportation, the reimbursement for staff who are going to patients' home in the home care landscape, those are allowable. Conferences related to patient care and industry, so acquiring knowledge, if you're attending conferences, those are allowable. Startup costs amortized over 5 years, and reorg costs amortized over 5 years. And then the workers' retention and recruitment expenses when they are greater than the workers' retention and recruitment revenue. And then non-allowable, any patient solicitation, discharge planning activities, non-visiting costs, contract for services exceeding 5 years, any gifts or donations, entertainment costs, alcoholic beverages, fines and penalties, for federal, state, local laws, or, bank fees or bank penalties, or, finance charges that may be incurred, non-patient care related travel, as I mentioned before, any acquisition related costs. So if you have legal fees related to an acquisition, and in this case, workers' retention and recruitment expenses when they're less than the workers' retention and recruitment revenue. So next, I did want to spend a little bit of time. I know we're running short, and I want to give James a few minutes on the audit process, but the allocation methodologies. This is how you get from your financials into allocations by county by level of service. So what you have is you have your total operating expenses, which should be your trial balance and your financials. And then you want to look at your units of service, whether they be visits or hours. And so, with those, and then your patient counts that are rarely used. Really, it's going to be most likely your units of service. So your visits, hours, or days of service. So when you're doing these allocations, what you want to consider is those hours of service, operating expenses, if there's anything related to square footage or a time study. And honestly, I would say 98% of the time, we're using hours of service by county, by discipline to do these allocations when we're working with clients on these cost reports. And so an example of that, if you want to go to the next slide, is so if you are providing, as I mentioned earlier, 1 hour of service for one visit for occupational therapy in one county, you need to make sure that that percentage is reflected. So what you want to do is you want to take your total units of service and you want to make sure you're getting a percentage by county, by level of service and discipline for those. So taking your data that's on Schedule 5 and setting up tables by county that show, okay, these are the total, by level of service by county, the expenses, so you can do these allocations. Because we don't expect, and KPMG in New York State don't expect you to have that information. So you want to make sure that the allocation, for example, of caregiver costs related to training, that would be one thing where you would use that hours of service allocation methodology. Total operating expenses you would use for administrative costs allocated, not using the other 3 statistical bases. So a good example of total operating expenses, it wouldn't be total operating, but your benefits allocation, you would allocate your staff benefits by the total salaries by discipline for those. So if your RN, had 100,000 in PT at 100,000 in expenses, they would each get an equal percentage of the benefit portion of that. Your square feet, you're going to use that for any of your capital related or any of your occupancy costs. And then if you have a time study, you could do a for hours of service by discipline. You could use those. Very rarely do we see that utilized. Like I said, I would say 98% of the time, we're going to use hours of service as the main driver of allocation methodologies. And you need to show, and your work papers need to be linked to show all of those allocation methodologies and how they work together to complete each of the schedules in the cost report. So having that table of percentage that shows from Schedule 5 to the percentage going to Schedule 3 from the financial statements.
All right, I'll just touch on the audit process very quickly. So the audit process will start once the cost reports are submitted. They'll have KPMG will have their kickoff webinar. The process normally lasts, it's going to last from October to January this year. So if you're selected for the audit, you will receive an email from KPMG letting you know that you were selected. And then they'll give you a few steps that you'll have to take before the process starts. So last year we had to update the contact information on the contact information tab. We had to make sure that all of our supporting documentation was uploaded to SFTP, and then making sure that we complete the agency representation tab. And that's pretty much going to be the whoever's listed on that tab is going to be the person who is responsible for the audit process and then signing off. So this person should be someone from the agency who will sign off on the audit once it's completed. The audit questions tab will have a breakout of several other tabs in it. So once you are selected for the audit, then you'll be able to see the audit and questions tab. If you're not selected, then you won't ever see it. They normally unlock it once you are selected. So there are several tabs within that tab. So the top document request tab. That's going to be if you're missing any documents that you forgot to maybe upload to SFTP or anything like that. Your financial statements follow-up tab. That's going to be if your financial statements don't tie back to the Schedule 3 or 4 or any of your other schedules 17, 18, or 19. The general questionnaire follow-up tab is for if they have any questions or follow-up questions on the answers to the questionnaire. Then you have your direct care follow-up and your program administration follow-up. These are both have to do with the schedules 3 and 4, not tying back to the financials. And then your service statistics follow-up, that's if they have any questions on what's reported on Schedule 5. And then your Medicaid revenue follow-up. So that's in that case, they would have questions on any of the revenue reported on Schedule 19 or the financials. And then once the audit process has been conducted and you've addressed all of their findings, you'll have to make comments on everything. And once they're through with that, they will go ahead and put the basically a summary of their findings on the potential findings tab. And then you'll have to go in and acknowledge that you agree with all of their findings, or if you have any comments on any of their findings, you could list that as well. And just some of the keys to remember are just making sure you have good source documentation, making sure you have good crosswalks that have formulas showing how you populated all of your schedules, as well as the policies and procedures. We recommend having the policies and procedures written down to show how you populated all of the schedules. And then we also recommend using the suggested source documents. I won't go through all these, but just making sure that you're looking through all the schedules and looking to see what you should be using as source documentation for those specific schedules. And then lastly, one of the key things is making sure that you're going through the top portion of each schedule and making sure that you're using the source documentation that they're suggesting. You don't have to use them all. And if you are using something other than what they're recommending, just make sure you list it under the other. There should be a box under other, and you're listing all of those documents that you use. And then make sure you're listing the file names below that. And all of those files that you list there should be uploaded to the SFTP site. And just again, making sure that you have all of your supporting documentation, using appropriate allocations that Mike went over, understanding the allowable versus non-allowable, identifying any related parties, and making sure you're you're staying organized after you submit the cost report with your supporting documentation. Again, this one kind of just goes over the same items, making sure we have supporting docs, crosswalk, making sure all of our schedules tie. And then lastly, just making sure we get the cost report submitted on September 20th. Start the process now. Start looking and gathering your data for the supporting documentation. And kind of like what Mike talked about, making sure you're identifying right now what is a non-allowable expense, what are your related party expenses, any shared expenses, and then starting to determine what your allocation methodology will be that you'll use. So, Mike, anything you'd like to add on these?
No, we're over the time limit already, but if you have any questions, comments, concerns, please do not hesitate to reach out. James and my contact information is now on the screen. It's also in the handouts that Lynn posted at the start of the presentation. So please reach out to us for questions, assistance. We do several of these cost reports for several of our New York State clients, and we've learned a lot throughout the process and can definitely be of assistance if anyone is interested in working with Symmetry this year on getting these. And, we know the requirements. We've been through the audit process. We've done the allocation methodologies, and we know how burdensome these can be for providers to try to do themselves, especially once, they complete them and then you go through the audit process. And if your schedules don't tie and your supporting docs aren't sufficient, it can create a big challenge for agencies. Whereas agencies that worked with us said the audit process this year, I think across the board, they said it was very easy to work with us. So I want to thank everybody for their time today. And we will hopefully hear from you soon.
Thanks, everyone. We appreciate it.